what happens with the microstructure of the market of what are these exchanges going to deliver to a trader in an environment where fees are close to zero. And it's kind of similar to what it was like in mainland China before the PBOC banned Bitcoin trading in 2017, where spot trading was free. There was no fees. And so then how did OKCoin, Huobi, and BTC China make money? They made money on the float of renminbi sitting in the bank. They made money on new issues. They made money trading against their clients. So like, what is this good? What's the revenue stream for Hyperliquid and Lighter and Aster and all the other platforms if trading's free?
Hey guys, welcome to Everyday Finance. This article by Arthur Hayes presents a daring plan for the cryptocurrency markets in the year 2025. The roadmap focuses on cycles, volatility, and the hidden possibilities that will shape the next major move. He employs an approach that focuses on reading alterations in the macroeconomic environment and locating instances in which anxiety is transformed into fortune. Hayes is of the opinion that the approaching year may be a significant turning point that has the potential to differentiate between long-term believers and short-term speculators.
It really depends on when you bought your Bitcoin in terms of whether you think this is a bull market or not, right? If you bought a bunch of Bitcoin in 2015, 2013, even 2020, you're like, yeah, this is great. It's a bull market. Bitcoin, it's outperformed gold. It's outperformed stocks. It's outperformed real estate. But if you're like, oh, wow, they were printing more money starting in March this year or April, and I bought Bitcoin at 95 or 100 or whatever $1,000, and it's only up 10, 15%, and I feel like a jackass because I was supposed to be the best performing asset. Well, wait a bit. So I think the premise of that question is a bit flawed because Bitcoin is the best performing asset ever, to respond to money debasement. You go back to World War II, and if you think about around the world, where could you invested your fiat dollars or euros or whatever currency if you wanted to escape, right? If you think about the United States, gold was illegal. Couldn't buy gold. You could only buy stocks, S&P 500 or whatever the stocks were at the time. If you were in Europe, you were probably blown up, couldn't buy anything, or the Germans were taking your gold. If you're in the UK, gold was banned, couldn't buy gold. Stock market was a piece of shit because they were getting bombed, so you couldn't do that. If you're in Asia, the Japanese were taking all your shit, so you didn't have anything either. So, we don't have an analog to what we could have bought back in World War II because there just weren't that many assets. But today, we have a stock market globally, relevant countries. You have gold. It's a bit clunky, but you can still buy it. And you have Bitcoin. And we've seen what's happened since 2008 in terms of the price performance of Bitcoin, gold, and stocks. And they've done very, very well, Bitcoin being the best. So I think that you just have to wait a bit. So I think that Hyperliquid could, by 2028, keyword 2028, go up a lot, or whatever the relevant leading DEX is. But I think that Hyperliquid is now going to experience some real competition, and the competition is from low to no fee trading because they've proven that finally the retail customer is ready for a decentralized trading experience. They're ready to connect their wallet and trade on chain, and they've generated these volumes. Okay, cool. Hyperliquid tries something, 4 basis points or whatever it is, right? And they've proven that there is good alignment between taking your revenues, buying back your token, creating wealthy folks who get an airdrop for trading. Okay, so then what does the next project do? They go, okay, great, I have this token. I'm going to charge 0 for trading, and I'm going to do this massive airdrop. And if you trade on my platform, it costs you nothing in terms of just the fee to me, but you're going to possibly get this lottery ticket that could go up 10 to 100x in the next 3 months. I'm going to vampire squid attack all of your volume, Hyperliquid. And you've seen this if you look at the lead table, assuming the volumes are legit. I know there's been questions about that of Lighter and Aster and some of these other protocols, because at the end of the day, from the DEXs, the customer wants the cheapest price. It's on chain. They're not having to pay for security. That's handled by the layer 1 blockchain. So then it just becomes a race to zero. And then what value add service does the DEX provide that allows you to charge a fee? And then I think that's what we're going to figure out. And in Hyperliquid's case, the issue is that because they have this massive unlock happening in the next 2 months, before all these new competitors started lowballing them, you could say, oh, well, they're going to make however many billions of dollars, buy back the token, and I don't really care about an unlock. Well, if I just have competitors that are offering 0 then and I have to somehow lower my fees or do something to keep the traders trading, which could materially decrease the revenue that I make. Well, then now I can't buy back all these tokens that the traders are worried about that my developers will be selling, and that's sort of the situation in the very, very short term that Hyperliquid has to overcome, and we'll see what happens with the microstructure of the market of what are these exchanges going to deliver to a trader in an environment where fees are close to zero. And it's kind of similar to what it was like in mainland China before the PBOC banned Bitcoin trading in 2017, where spot trading was free. There was no fees. And so then how did OKCoin, Huobi, and BTC China make money? They made money on the float of renminbi sitting in the bank. They made money on new issues. They made money trading against their clients. So like, what's the revenue stream for Hyperliquid and Lighter and Aster and all the other platforms if trading's free? I think that's a political choice in terms of what are we going to share as humans, right? So imagine that AI was as effective as Sam Altman says it is. It is not, obviously. And all of a sudden, 90% of the jobs are gone. And like, oh, great. Wow, everyone's super productive. We can go and just, I don't know, jack off all day, whatever the fuck you're going to do. And so, but you had this thing called a mortgage and a car payment, and you had this thing called rent, and you don't have a job anymore. And so the question is, okay, well, is the government going to mandate that private profits must go to the populace because now everyone's so productive? But then the people who own those companies are, well, hold on a second. I'm Facebook. I just dropped fucking $1 trillion in CapEx. I want my fucking returns. Why am I now giving universal basic income to all these motherfuckers who weren't investing while this AI thing was happening? I don't want to share. So then, okay, well, then what are you going to do about that? Are you going to just take away private profits and distribute them to people? I don't know. But again, that's a political question depending on where you're based. Or you were fortunate enough to have financial assets and you invested in crypto or AI or whatever, and you've done very, very well. And then there's all these people who weren't, in your case, you believe you're smarter than them or better than them because you have more money, whether or not that's true. Are you going to share? Oh, let's put a 99% tax rate on all capital gains and dividends so that everyone else can share in this amazing AI revolution and productivity boom. Do you want to share? Probably not. And so I think then the question is, okay, well, it's going to be very difficult for the government to politically expropriate assets from those who are in power already to essentially allow everyone to live a utopian lifestyle because of AI. Then what do? You just print a fuck ton of money and hand everybody out and then keep the capital structure the same. And so either you have a massive deflationary event and asset holders are completely wiped out, or you have a massive inflationary event which continues the same social structure, but then the asset holders feel like they've gotten something out of a return for their prescient investing behavior. Again, a political choice. I don't know. But if I had to bet, I bet on the government not wanting to rock the boat, and they're just going to print the money to paper over this big boom, and then maybe we decide to share as humans in this AI and this new ecosystem. So it could be a completely, risk-off event, which everything's worth zero, or it could be a risk-on event where everything's worth infinity, and I don't know what that is.
Bitcoin has reached a pivotal juncture in market history. There is a strong indication that a significant breakout is on the horizon. Since the technical signs, particularly the Bollinger Bands, are currently more constrained than they have been in years, analysts believe that the next 100 days might determine the future of Bitcoin, which could either be a parabolic surge to new highs or the breakdown of its bull run that began in 2023. Tony the Bull Severino. A trader cautions that these setups frequently result in fake-outs before the significant move actually takes place. Regardless of whether Bitcoin BTC experiences a spike or a decline, volatility is unavoidable, and the repercussions of such fluctuations are usually explosive.
Obviously, we love DeFi at Maelstrom, and if you look at our portfolio, our best performing things, Athena, stablecoins, DeFi. I wrote asked you before, this one was about stablecoins and how I believe that this is the policy of the American empire to try to force dollars around the world, and that's going to benefit the DeFi ecosystem because you're going to onboard, millions or billions of people to using these tokens to represent whether it's a fiat currency or it's a bond or it's a bank deposit, what have you. And so we're super bullish on all things DeFi in the medium and the longer term, but obviously there are some short-term hiccups that, relevant projects could not do so well in the short term, but in the long term, we're very positive on that kind of stuff. I think that the CEXs are still going to be very relevant because there's lots of high frequency trading shops, institutional players who cannot trade on chain or who do not want to trade on chain. They're still a bit faster. If you're talking about high active transaction settlement latency, those sorts of things, like a CEX is still way faster. They'll probably make a lot of money on new issues, right? Until one of these platforms sort of takes over that market. But I still think there's a long way to go before the DEX takes over in terms of the most prevalent method of trading for crypto. So obviously I think that this is the policy of the U.S. government to get dollars out to a lot more people, whether it's the Eurodollar market or it's ordinary folks who are not in America who'd rather want to have a dollar bank account, but their regulators, for obvious reasons, don't want them to have a dollar bank account, and they're going to use the big tech platforms as their sort of attack mechanism and stablecoins as a way to dollarize the global south. But in terms of the technology, it's not that difficult. I think that most of these projects are zeros in terms of these new stablecoin projects, because if you don't have a distribution arm, you don't have a social media company, you don't have a large exchange, you don't have a large sort of MNC, multinational, FMCG business that has lots of clients, you got to spend to get those clients. You have to spend for that network effect, and you're 10 years behind the curve of Tether and Circle and Athena and all these other guys. So then how are you going to get enough money for that? So I think I would never invest in a new stablecoin issuer who doesn't have one of these distribution modes. I think a lot of these local currency stablecoins are zeros as well, because at the end of the day, the clients in these markets want a dollar bank account. That's what they want. Korea, Japan, Hong Kong, Singapore, all these Asian countries, domestic banking is very good. You can instantly send people money as long as you have a bank account. You can, scan QR code. It's not that bad, right? You don't need a stablecoin. So why would I spend more money in some way, shape, or form to, subsidize the stablecoin issuer building up a network? So I think those are zeros as well. I think the real things that might be investable are, how do you allow small businesses to accept stablecoin payments, whether it's systems or it's some sort of SDK that allows them to easily switch between fiat currency to pay their taxes and whatever, and stablecoin payments from their clients, the accounting mechanisms that these companies will do, like triple entry bookkeeping and those sorts of things. So I think that's a very investable area in the stablecoin space. Before Howard Lutnick was the owner of Cantor Fitzgerald, who is also an investor in Tether, was in a position of political power, there was a very big fear of what happens when someone shuts off Circle and Tether's banking situations. And that was one of the reasons why I put out this idea for Athena, which is, why are we using this dollar substitute that requires the U.S. banking system, which hates us, and we hate them too, to allow it to exist? That's why we should use perpetuals and Bitcoin and other currencies to create this synthetic dollar. And that's why Athena was created. And I think it's done very well. So if we are worried about that scenario where the banking system, turns hostile again, well, we have things like Athena, which do not use the banking system to maintain their peg. Now, if you're worried about, the treasuries not holding a dollar, well, I think the U.S. government's never going to default on a debt because they have a printing press and it costs them nothing to make sure they nominally make sure that every treasury debt holder gets paid back. Yeah, the real value is whatever the real value is, but on a nominal basis, I'm not worried about, treasury auction failure and all those sorts of things. I always think about it as what is the most standardized thing that I can trade? It's why do people trade lots on these commodity markets? Because you've standardized a contract. Okay, a oil contract is so many barrels of oil, and that is in the contract, right? We don't trade all these random idiosyncratic things because it's hard to get liquidity in one place. So if we're going to have intellectual property traded on a blockchain, I'm interested in what is the most standardizable unit of that thing that I can trade, that we all can agree on to trade is not going to be the idiosyncratic movie or book or whatever that's going to have liquidity. It's going to be something more fundamental that I and everyone else can agree on, that we want to trade this, that's upstream from everything else. I don't know what that is, but when we figure that out, that's what I'm interested in, not just the long tail of assets, because it's very difficult to build liquidity in that manner, in a two-sided marketplace. I mean, I think the big thing is that the people who trade the most and use this stuff the most are here, right? Even it's like stablecoins. You feel in the US are like gaga over stablecoins. None of these motherfuckers use stablecoins, but we all use them. You know, I use them in Argentina. I use them in Indonesia. I use them all over the world, right? Because that's where they're needed, and those are the solutions that work. Or trading perpetuals. It wasn't America that started trading this shit. Like, it was Korea that really started trading perpetuals in size when we first launched them back in 2016. So I think, you know, obviously, there's lots of technological innovations that happen in the Western, more, I guess, basically the United States versus the rest of the world. But, you know, Eurasia accounts for like 75% of all human biomass in the world. So it's us who determines what is going to be a successful solution, not, you know, the financial capitalists in New York and Silicon Valley.
The cryptocurrency XRP is gradually becoming into a worldwide financial backbone, while traders are focusing on Bitcoin. Instantaneous payments across international borders are made possible by its lightning-fast settlement system, which now connects economies in Asia, Africa, and Latin America. This system is powered by platforms such as SBI, Remet, and Tranglo. Cryptocurrency is becoming more prevalent in everyday life as it expands outside the realm of finance and enters loyalty and travel programs. With legal struggles behind it, and large institutions like SBI Holdings and Santander incorporating it for liquidity management, XRP steps into 2025 stronger, more useful, and more respectable than it has ever been before, demonstrating that it is more than just a speculative coin.